terminologies in the recent times, especially during the COVID pandemic. Hi, fintech, one of the most talked about terminologies in the recent times, especially during the COVID pandemic during 2020-21. It was most talked about topic because of many reasons. Remember, though there was a pandemic, people were not allowed to go to banks, financial institutions, insurance companies. Still, they were able to make their transactions with the banks. They were still able to withdraw money, deposit cash, and they were used to do many other things that are related to finance industry. So how it was possible? Who ensured, who facilitated all these transactions? So what is fintech is all about and why it is so important across the world? Why it is a culture across the world? Let's try to find out answer for all these questions in today's session. So welcome to the course on Introduction to Fintech. My name is Pawan Kumar Chandrapa. So in the entire series of videos, we are going to discuss the background and meaning of fintech, the evolution of fintech industry. We'll look at the key statistics related to fintech industry, and we'll look at the why it is important, why fintech industry is so important in these days. And we will understand what are the fintech services available in the market, what are the risks involved post fintech implementation in all the domains, not just in banking or finance, it's in all fintech industry. It's in insurance, it's in mutual fund, it's in stock market. And also we'll have a look at the fintech regulation in India. Let's begin with the first concept. Recall. Remember, you are standing in the queues for depositing cash or withdrawing cash in your bank account, right? Also waiting for weeks time to obtain your bank statements. Just applying for bank statement and waiting for weeks to get it. And also waiting for a week time or more than week time to get your bank account open, right? And also waiting for multiple days to transfer funds to your dear ones, right? And also sending money through India Post through money order facility. That was one of the oldest form of money transfer facility that was available, right? And also spending days and weeks time to buy insurance plans, and also visiting insurance branches to get the claims done. Looks very horrible, right? And especially for those who actually born in Gen X or Gen Y, still it looks decent. But for those who born in Gen Z or Gen Alpha, it looks like a laughing stock, right? So all these problems were very serious in finance, banking and finance industry. And now, thanks to technology, we were able to solve all these problems in an efficient way. So that's how fintech has evolved, and that's how fintech has contributed to banking and finance industry. So what is fintech? So we hear this term all the time, right? It's a buzzword nowadays. So what is fintech? So fintech is basically it's a combination of two terms, finance and technology. So combining technology in banking and finance services, right? So the use of technology to deliver financial services to the consumers. How we can make a best use of technology to provide financial services to the consumers. And it is also about using internet technologies for providing financial services. That is fintech. So if you look at the formal definition for fintech, fintech is a term used to designate any new technology that aims to improve and automate the use and delivery of financial services. So largely it is about using technology to provide banking and financial services. That's fintech. If you look at the examples, you must have visited ATM all the times, right? So ATM, NEFT, IMPS, online account opening, using trading apps to do trading activities, and also making payments using payment apps or mobile banking, or you must have done eKYC. So what is eKYC? KYC is nothing but know your customer. So doing know your customer, this formality, because when you open a bank account or any financial services, when you're taking any financial services, your service provider will ask you to do something called KYC. So KYC, now it's no more paper-based KYC, it is digital KYC. That's called eKYC. So that's That's the example for fintech services. So here, what you look at on the screen is the traditional ways of providing fintech services. Now, if you look at the application of fintech, financial technologies, it can be viewed in two categories. One, it's in the backend systems. So, in the backend systems, in the sense, financial services providers used to have these technologies to provide services. They were using these technologies to ensure the backend operations are smoother and efficient. For example, the tracking tools. For example, in a bank, there will be several customers, so there'll not be one or two customers, so they need to maintain this data, consumers data, right? So they have to maintain their clients data. So when they need to maintain the clients data, there will be an order in which they need to maintain, so that there will be an efficient way of tracking the things. So to track the customer data in terms of the parameters they establish, it is a tedious task. So technology has evolved and sorted all these problems. And also risk analysis and mitigation services. For example, uh, in a bank, when a bank lends money to the customers, there will be innumerable problems in terms of recovering that loans. So when they want to mitigate the risk in the lending process, they may have to do something called 5C analysis. So what is 5C analysis? It's character, capacity, capital, collateral, and condition analysis. So, when a loan is granted to a consumer, it is important to understand the character of that person, the character of that particular individual. So, what is the character of that particular individual? Is he up to the values? Is he up to the integrity? Is he up to the ethical standards? So that needs to be analyzed. And thankfully, the recent technologies that have evolved are able to trace the character of individuals, and that character analysis is important to the banks in the lending process. For example, what has he done in the past when he was borrowed money, right? So how has he paid, right? How has he behaved when he took loans from the banks? Has he paid honestly, or has he gone default on his repayment obligations? So all these things will be tracked under character. And also capacity. So the capacity is analyzed using the tools in terms of what is the cash flow, what is the income a person is earning, and how much is having, something called the disposable income. So what is the disposable income for an individual, and how is he making the best use of that disposable income? Has he been using this disposable income to repay the obligations, or is enjoying his life even when he has financial commitments, or has he been spending the money lavishly when he has financial obligations? And also the capital, the collateral, right? So the capital and collateral, what is the capital he has, what he owns, what he owes, right? The collaterals, what are the assets he own, right? And also the condition in which he is actually borrowing. Is he under pressure of debt in which he is actually borrowing, or is borrowing to have a comfort for his life? So those things will be analyzed in the backend systems. So the fintech earlier was restricted for these categories of requirements. Over a period of time, the fintech has evolved, and now fintech has been extensively used in customer service. You can see fintech in most of the services we obtain from the financial services industry. If you look at the examples, for example, if you have a bank account, you use chatbots, right? You talk to a bank employee and chatbots, and you resolve your query. You ask for balance inquiry, you ask for the status of your account, and also you do fund transfer using your net banking facility, right? And also you do neo banking. So what is neo banking? Neo banking is using banking and financial services without having a brick and mortar system. So what is brick and mortar system? It's a physical infrastructure where the financial services are available. That's a brick and mortar system. So the neo banking is something that you can avail all financial services without even visiting to the brick and mortar system. So that's neo banking. And also you have several instant services. You can withdraw cashes instantly. You need not wait in this long queue to obtain your cash from the bank. You can transfer funds without any delay, right? You can use IMPS, or you can use RTGS to transfer funds instantly, right? And you can make payments at store or with your merchant without even waiting for minutes. It will happen in few seconds. So that's the advantage of using tools and technology, the fintech tools in banking and finance services. When was it started? Fintech. It looks like it's very new, right? It looks like brand new concept we're talking about. It's not. The history of fintech can be traced back in 1850s. You can go back 150 plus years and you have the roots of fintech in 1850s. And it looked like the terminology has been evolved since less than a decade. No, it is not true. So it has been used since 150 years plus, but it looked like it is started recently. But if you can look at 1858, that's when the first fintech concept. When was it started? Fintech. It looks like it's very new, right? It looks like brand new concept we're talking about. It's not. The history of fintech can be traced back in 1850s. You can go back 150 plus years and you have the roots of fintech in 1850s. And it looked like the terminology has been evolved since less than a decade. No, it is not true. So it has been used since 150 years plus, but it looked like it is started recently. But if you can look at 1858, that's when the first fintech concept was evolved. But that time it was not called as fintech, it was just a communication tool. For example, the first transatlantic cable connects Europe and North America when Queen Victoria and President James exchanged wishes with each other on telegraph. So that's the first established the fintech communication between two persons across two different geographical locations. In 1918, the Federal Reserve developed FedWire enabled fund transfer. I think that's a first fund transfer service was available between banks, and it was not available for individuals. It was available for member banks. The member banks used to transfer funds within the branches using FedWire. That was in 1918. In 1950s, the first universal credit card by Diners Club Incorporation. That was the first credit card introduced in 1950s. And in 1967, the first ATM by Barclays Bank. So Barclays Bank established its first ATM facility in one of the locations in London. So that was the first ATM. And that's when basically when the first ATM was introduced, it was only to withdraw the cash. Only to withdraw the cash, the facility was given, and later it has. Now you know what all services you can avail using ATM facilities. In 1970, the clearinghouse interbank payment system chip began operating. It is a US based money transfer system by private entity. In 1971, Nasdaq established. So Nasdaq is the second largest stock exchange in United States, and Nasdaq started its operations providing stock trading services. So that's in 1971. SWIFT was introduced in 1973, and this is by 15 countries. This is basically started in Belgium, and this is an international fund transfer facility established during that time, and now it is still used. In 1990, and that's when there was the rise of internet, and the internet technologies have evolved, and this was a very good time for the growth of fintech. In 1997, the first virtual bank introduced by ING Direct in Canada. So that's in 1997. And in 1998, PayPal started the first online payment system, and this online payment system was used for national as well as international payment transfer services. So 2008, when a global recession, right? So we all remember the global financial crash during 2007, 8, and 9 when the Lehman Brothers crashed. That was one of the biggest crash in financial services industry, and that's when people started suspecting financial services industry, when the traditional banking system has lost its credibility because of that crash, that crisis. And that's when the fintech started evolving, and that's when the fintech started gaining traction. In 2009, the first version of Bitcoin introduced, and that was one of the revolutionary moment when that started replacing the physical currencies. So that's in 2009. And in 2009, again, Venmo launched mobile-based systems for money transfer. And in 2011, Google launched Google Wallet. 2013, Chime launched fully digital no-fee alternative for traditional banking. And in 2013, Play developed a platform that links application with user bank accounts. So that was between the user bank accounts. And in 2017, Alibaba introduced Smile to Pay. So you have to just smile in front of the QR code. You have to smile in front of the camera to make the payment, and that was installed in KFC, in one of the KFCs in China. And in 2022, you know what's happening. So it's mobile wallets. It's a world of mobile wallets, payment apps, equity, crowdfundings. We have robo advisors now to advise about financial planning, and also we have cryptocurrencies in place. So that's how fintech industry has evolved for almost 150 plus years. Now let's talk about the statistics of fintech. Fintech has been talked about across the world, and the industry is growing. And no country is exception nowadays, and everyone wants fintech because of its own inherent advantages. According to the survey conducted by Ernst and Young in 2019, fintech ecosystem, if you look at the fintech ecosystem, US has the largest fintech ecosystem in the world, followed by China and India. So that's the size of United States fintech industry. And according to E&Y, 96% of the consumers are aware, at least they are aware of at least one fund transfer facility or payment system. The average of 64% of global consumers have adopted at least one fintech service across the world. 3 out of 4 global consumers use money transfer and payment fintech services. So that's the volume of the consumers who are using the fintech services. According to market data survey results, global fintech industry projected to reach a market value of approximately 324 billion by 2026, and that is growing at a CAGR about 25.18 between 2022 to 2027. According to the survey conducted by National Investment Promotion and Facilitation Agency, Indian fintech industry's market size is about $50 billion in 2021, and it is estimated at $150 billion by 2025. And according to the survey conducted by Statista, the neo-banking segment is expected to show a revenue growth of 42.2% in 2022. You can look at the way the fintech industry is growing and the way it is actually gaining traction across the world. And India is recognized as the strong fintech hub globally, and also we have China. China has been, consistently, using fintech industry efficiently, and also they're making the best use of the services available under fintech. And 23 plus fintech companies operating in India, and most of these fintech companies are unicorns. Unicorn means the valuation of these companies is over $1 billion. So that's why we call them unicorns. So that's how industry is growing across the world. Now let us understand why fintech is important and what is that we are gaining from fintech industry? Cost is one of the important reasons why fintech is, most talked and most interested topic right now in the market. Because if you remember the way the banks functioned in those days, the insurance companies, the stock markets functions in those days. For example, to deposit cash, now you're not visiting any branch, right? So you're just doing it virtually, or you'll go to an ATM, you deposit cash, or you go to an insurance company, you do claims, right? So now you're no more doing it. You have your online account, you log into your account, you see the premium, you pay the premium, and you generate your statement, you generate your premium statement, and you do everything almost virtually. And that saves a significant cost for both for banks and financial. Now let us understand why fintech is important and what is that we are gaining from fintech industry. Cost is one of the important reasons why fintech is, most talked and most interested topic right now in the market. Because if you remember the way the banks functioned in those days, the insurance companies, the stock markets functions in those days. For example, to deposit cash, now you're not visiting any branch, right? So you're just doing it virtually, or you'll go to an ATM, you deposit cash, or you go to an insurance company, you do claims, right? So now you're no more doing it. You have your online account, you log into your account, you see the premium, you pay the premium, and you generate your statement, you generate your premium statement, and you do everything almost virtually. And that saves a significant cost for both for banks and financial services provider and also to the consumer. Convenience is another important reason. By using fintech, just you have everything at your convenience. You can just use your mobile phone and you can make payment of your credit card, or you can make payment of your any bank related transactions, right? You can do that virtually without using your brick and mortar banking facilities. And also the speed in which you can do it is mind boggling, right? You can just complete the transactions in just a few seconds, not even few minutes. You can do it in few seconds, and you need not visit any branch, so that will save significant amount of your time to do these financial transactions. And also the accessibility, you can access financial services wherever you are on the planet earth. So that's the advantage of using fintech. And the transparency, this was one of the most important reasons why in 2008 people suspected traditional banking facility, traditional financial services provider, right? So now you can completely view your statement. You can see the history of your deposits or your withdrawals, and also the charges that the banks are, imposing. You know what all charges the banks are imposing, because without knowing, without having this virtual systems, you would have not been able to view what is actually charged in your account or what is actually deducted from your account. That information would have been missed. But now you have access to every transaction, and you know when, at what time the money is deducted from your account. That's an advantage of fintech solutions. Personalization. Most of the financial services products are right now customized or personalized to the requirements of various age groups, various different individuals at different age groups. And that's not possible in the traditional banking systems. Right now, if you are frequently depositing your cash, if you frequently deposit your cash into your bank account, banker knows that you are frequently depositing your excess money into the bank account, and then they'll start suggesting you to push or shift your money into a financial instrument that gives you the better return instead of keeping it in the saving account or in your current account. So that's how you can personalize your transactions with the fintech solutions. And also you have greater choice. Right now, you have, if you want to open a bank account, you have all the bank accounts, all banks handy, and you can just browse through and you can find out which bank is giving you the best interest rates. So the which bank is giving you the best investment returns, or which bank is giving what unique service in the industry. And based on your choice, you can avail the banking services or the financial services in the market. So these are the importance of fintech industry, and this is why largely fintech industry is so liked. It's very much liked in the market. Then what are the services that are available under fintech umbrella? We talk about fintech, and the moment we talk about fintech, it is mostly visualized as its cryptocurrency. Not necessarily it should be cryptocurrency related, right? Cryptocurrency is just an addition to fintech services, and fintech services includes many other services that are available virtually. You can look at the ATMs, net banking facilities, mobile banking payment systems, insurance, crowdfunding, stock trading, right? And also digital wallets, credit ratings, cryptocurrencies, robo advisors, and budgeting apps. So all these are part of fintech services, and any of these services can be taken into the discussions on fintech umbrella. So what are the services available under fintech services? If you can look at the ATM machine, you have balance inquiry, withdrawal cash, depositing cash, generating statements, historical statements, right? You can do recharge of your mobile, or you can pay taxes. You can pay your insurance premiums, right? You can also avail loans or cards, right? You can apply for loans and you can apply for cards. If you can look at net banking facility, you have NEFT, National Electronic Fund Transfer, right? So we use this to transfer the funds, and you don't have minimum requirement to transfer funds using this facility. For example, you can start with rupee 1 and you can transfer funds up to 10 lakhs. So here the transfers will happen in the batches. So Reserve Bank of India arrange the this transactions settled in batches. So once in 30 minutes, so twice in an hour, that means in 48 times in a day, the fund transfers will happen under NEFT, and your services will start from 12:30 p.m. every day and ends at 12 o'clock morning AM. So that's how NEFT works. If you look at RTGS, so RTGS is again similar to NEFT, where the funds will transfer, and here the minimum requirement for fund transfer will be 2 lakhs. So minimum 2 lakhs and up to 10 lakhs. And one of the beauty of RTGS is the funds will be transferred instantly. It will not take too much of time. It will happen in few seconds. So immediately your counterpart can get the funds transferred. And here the maximum limit is 10 lakhs and the minimum is 2 lakhs. And there will be charges for RTGS. You have to be careful what charges they're charging. Like it will start from rupee 5 and it will go till 15, right? So there will be charges. And IMPS, it is similar to RTGS. Again, in IMPS, the money will be transferred immediately. Only the thing here in IMPS, there is no minimum requirement, like it is starting from rupee 1 and it will go till 10 lakhs. So in RTGS, the minimum cap is like minimum 2 lakhs. But here in IMPS, the minimum is rupee 1 and the money transfer will happen instantly. And also you can generate the historical statement from your net banking facility. You can pay your utility bills, apply for loans, cards. You can reset your ATM pin. No need to visit ATMs to reset your pin. You can do it virtually, and you can do KYC. So KYC is also enabled in your net banking facility. And also you can look at the CIBIL scores. You can apply for your CIBIL score. So what is CIBIL score? It is a credit rating that is given to an individual based on his credit history. So that's CIBIL score. You can apply for it. And also you can apply for checkbook. You can take IPO. So what is IPO? When a company wants to raise funds in the public, they're not allowed to do so under Companies Act 1956. Right now it is Companies Act 2013. So they're allowed to go to primary market. So there are two kinds of market, the primary market and the secondary market. So when they want to raise funds in the public, they want to get listed in the stock market, first they have to go to the primary market. So in the primary market, they have to go through the IPO process. So IPO process is nothing but initial public offering. So this facility is available in net banking. You can apply for, if a company is looking for funds in the public, so they'll publish it and that advertisement will be available to you, and that advertisement is available in your net banking facility. You can avail that. Demat facility, demat, so dematerialization of shares, right? When you want to do trading, you have to open demat account. So if you want to open demat account, you have option in your net banking facility. You can open your demat account. Be careful, demat account is not your saving account, it is different. So demat account is used to store your shares in a dematerialized form, and in your account will be linked to demat account, and that account will have the amount credited when you are transferring funds, and that money will go to the company through your bank account. And demat account is only to have your shares stored in your account. And that insurance facility, you can apply for insurance, you can take loans, and also you can apply for mutual funds. So that's all about net banking services. Mobile payments, you make a lot of payments every day, right? So there will be different kinds of payments that you do every day. For example, there are three categories of payments everyone can do using net banking, especially mobile banking facility: in-store payments, remote payments, and also point of sale payment. In in-store payment, it is like a mobile wallet. You have mobile wallets, right? For example, Paytm. You have your wallet and you make payments wherever you make transactions, whenever you buy or avail services in a store. And also there is one more thing, quick response, QR code. So just by scanning the code, you can make the payments. That's QR code. Remote payments, it is internet-based payment system, and you use your browser to use your net banking facility and make the payments. And also payment links, SMS, and net banking facility. For example, payments. For example, if you go to Pharma store, you'll go to, let's say, you'll go to Apollo or MedPlus. So when you go and buy medicines, and then they'll ask you to make the payment, and if you say I'm going to make payment using your Paytm or PhonePe or Google Pay, they'll ask you just wait a second. We are sending a link. So they'll send a link to your mobile phone, and you will receive it in a message. By clicking that link in the message, you will be able to reach the page where you can make the payment instantly without asking for any credentials. So you can directly make the payment from your mobile phone, and also the SMS and the links. Point of sale payments, it is about credit card or debit card payments. So when you swipe your cards at a retail store and when with your merchant, that is called point of sale payment. And also, as mentioned earlier, so there will be something called smile pay, right? Smile pay, by looking at the scanner, if you smile at it, it'll accept the payment. So that's available in KYC in China. So it is not available extensively across the world, but still, yes, this is one of the technology used in point of sale payments. And also Wi-Fi enabled payments. For example, now you no need to swipe your card to make the payment. You just need to have your chip based card where there will be Wi-Fi enabled, and you can just have your card near the machine. The machine will identify that chip and it will make the payment. It will take the payments. So there will be three kinds of cards you can see: Visa, MasterCards, and American Express. So all these cards now coming up with chip, and this chip will be Wi-Fi enabled, and this Wi-Fi enabled card will be recognized by the machines instantly. So that's mobile payments. Fintech solutions are also used in insurance industry. In fact, fintech solutions are used in insurance industry extensively. You know how insurance works, right? So the large number of people buy insurance and only few people will claim the insurance, right? So there will be millions of people who actually take the insurance plans and only those few will claim for it. So now when there are millions of people who are actually availing for insurance facility, and tracking those details will be a tedious task, and also understanding which policy is due on when and which policy is due for settlement is a very tedious task. So fintech is providing solutions in that area. And also automation of claim processes. Now the claims are automated. You no need to visit the branches to apply for claims. It is largely provided on a virtual format. For example, let's say you have a car and you have an insurance claim on your car due to some kind of repair work. Now you don't need to visit your insurer. Rather, you just inform your automobile service provider, who will have association with the insurance company, and they'll collaborate with them, and then they'll get it insured. They'll get it claimed for your car. So that's how the things are automated, and now it's almost seamless. Risk management is one of the serious problems in the area of insurance, where it's too difficult to understand which claim is authentic and which claim is suspicious. So fintech solutions are available in insurance area, especially the blockchain is making a lot of contributions to understand the authenticity of insurance claims and also the authenticity of insurance policies that otherwise is not available in traditional insurance tracking systems. Now the fintech solutions are available for individuals to understand how they're actually making use of insurance facilities, and also the companies who are actually providing insurance services are available. They're able to understand the authentic insurance plans. For example, they'll have a look at the social medias where the individuals how they actually behave, whether the person is aggressive, whether the person has any habits, whether the person is risking his life by doing any kind of acts. That and all will be traced using fintech solutions. And also IoT is using internet of technology is helping insurance companies to understand the social behavior of individuals, and based on that they're actually uh, offering the insurance plans. There are also telematic insurance facilities. It's like usage based insurance. So based on the usage you can choose your premium. Pay as you drive, how you drive, whether you're an aggressive driver or you're a defensive driver, what kind of driving you're doing, are you risking your life when you're driving, and all those things. And also pay how you drive, based on that you can pay the premium. That's telematics insurance facility. And insurance fraud detection is now possible using IoT, and they're able to make it using machine learning techniques to understand the frauds that are happening. So how the policies are issued to an individual. And also insurance data analytics. A lot of insights can be gained using the data analytics. Crowdfunding. So now the fintech solutions are not restricted to uh, insurance and banking. Right now, funding can happen from different sources. For example, crowdfunding. Crowdfunding means you're not depending on a bank to borrow loans. You can also approach the society. You can approach citizens of the country to lend you money, right? So crowdfunding basically collects money from people at large. People from different locations of the country can also contribute, and these small contributions will come to a crowdfunding agency or a company, and who will gather these funds, and they'll make use of that particular funds. There are four different categories of crowdfunding is available: peer-to-peer lending, equity, a reward, and donation. So peer-to-peer lending is basically it's a debt-based crowdfunding. Here individuals who actually lend money to crowdfunding companies, they actually expect the interest payments. They're not looking for the profits, they're looking for interest payments. Say the current interest rates are 7%, so the peer-to-peer lending, these individuals will expect the 7% returns, 7% interest every year on their lending. That's peer-to-peer lending. Equity based lending. So here equity, the people who are actually providing funds to these crowdfunding companies, they expect equity ownership in the company. They want to have ownership in the company to the proportion of investment they have been making. Say I'm investing 1000, I'm owner of that particular company for 1000 rupees. So that's the equity stake. That's the ownership stake in the company. Reward based lending. Here in reward based lending, rewards will be given to the individuals who actually invest, not the debt interest. There will be no interest, there will be no profits. Here it will be reward. And again, what is the reward here? The reward will be based on the proportion of investments you are making in a company. If the investments are larger, the bigger, the better the rewards will be. And when the investments are minimal, then the rewards will be lesser. Again, donations will come to the foundations and also NGOs for society. Okay, for the this is for the larger cause. For example, to remove poverty, to remove hunger, or to help people who are actually below the poverty line, or individuals who are actually struggling to make their livelihoods, or by providing a small employment. Those kind of things, the donations will be utilized. If you look at peer-to-peer lending, it is, for example, take an example, Rangde. Rangde is an organization which actually collects these funds from different individuals across the country, and those funds will be given to the entrepreneurs. For example, there are farmers, there are carpenter, there are plumber who actually wants to start their own small business. Now they need money. For example, let's say a plumber need 10,000 to start his own business. Now Rangde collect money from individuals, and they fund this plumber for 10,000, and for that 10,000, debt interest will be given to those who have actually made investment in that particular venture. So that's called peer-to-peer lending. So Rangde is the best example for this. So like this is the 4 different categories of the crowdfunding we can see in the market. Blockchain, right? In the crowdfunding, blockchain is making significant contribution to crowdfunding nowadays. For example, by accepting investments in blockchain using blockchain technology, the credibility of that crowdfunding will enhance. And those who believe that the blockchain technology is used, and the fundings will be very smoother, the fundings will happen efficiently without any problems. And also, those who are actually investing in a company using blockchain technology will have ownership stake in the company. And when they have ownership stake in the company, when they have used blockchain technology, there will be minimal scope for fraud. The frauds will be eliminated because the people who are actually investing in these ventures will have ownership stake. And also the cost involved in funding using blockchain technology will be minimal, and that will reduce the burden, the expense burden on the crowdfunding company. And also the accountability in crowdfunding, the smart contracts are used, right? So in blockchain technology, the smart contracts are used. When the smart contracts are used in making investments, there will be no scope or limited scope for people who actually raise funds for fake reasons, because it is based on the milestones and also based on smart contracts. The cryptocurrencies investments are exchangeable on peer-to-peer network. This is one of the advantage of using cryptocurrencies, because cryptocurrencies are exchangeable. The investments can be exchanged, similar to stock market where the shares can be exchanged, traded on the stock market. So by trading on a particular stock, the value of that particular stock will increase. The valuation of that particular stock will increase many times. It will go beyond the intrinsic worth of that particular stock. So valuation, for example, let us say the intrinsic worth of a particular stock is 1,000 rupees, 1,000, and the market value of that stock is 1,200. That means that's a market value. That's a inflated market value. So same is possible in cryptocurrencies, in cryptocurrency market. So that's the advantage of using blockchain in crowdfunding. Stock trading. So stock markets are using fintech services extensively. For example, now mobile-based trading platforms have evolved. For example, we have Zero the Kite, we have Angel, right? We have so many mobile-based technologies which will enable investors to make tradings without even visiting the stockbrokers. Stockbrokers are no more helping individuals in taking buy or sell signals. And also the payments that are made using mobile apps, easing the life of investors. There is no need to transfer the funds, and the funds transferring to the person who's actually buying or selling the stock. And we have robo advisors in place. So who is the robo advisor? Robo advisor is the person who assists you virtually in taking investment decisions. For example, you are confused about which stock to buy and which stock is going up or down, which stock is actually making a lot of noise in the market. So you have no idea right now. So you go and approach the robo advisor. Robo advisor will help you understand which stock is doing good and which stock is volatile in the market. So if it is volatile, They'll ask you to hold on or to wait, or if the stock is consistently raising, they'll suggest you this stock is doing good. Remember, volatility is a gift in derivative market, but not in stock trading, right? Individual stock trading. When you are making investments in stock trading on a particular stock, it is risky because it will go up, it will crash, so in the same speed. But if the same thing happens in derivative market, it's a gift. You can take a derivative instrument and you can work and you can trade on this volatility to make the money. So the robo advisors will help you, and also you need to remember the financial advisors, the investment advisors that you take from robo advisors will be cost efficient. You're not spending money for a person who is actually personally visiting you to give financial advice, where it is costly to invite a financial planner to come and advise you about a particular stock. Here, robo advisor will automate. Another important advantage is they'll automate, and also they will remove all the emotions from your investment decisions. So you will not have any hard emotions or anger, happiness, fear, panic, hatred. All these soft, hard emotions will be removed from your investment decision, and that's very important when you're taking investment decisions. So when your investment decisions are influenced by these hard emotions, you are tend to take a wrong decision in investment. So that's an advantage of going for robo advisors. Algo trading systems. So now using machine learning techniques, the trading systems have been so efficient. You no need to bother too much about what price is going up, which stock is doing good, right? You set certain parameters for the system. The machine learning techniques will help you set buy or sell signals in the market. So at what price you have to sell the stock, and what price you have to buy it, and what price you have to close your margins, you have to book the profits. So algo trading systems will help you automate your trading systems, and that's how you can remove the hard emotions from the investment decisions. Remember, removing hard emotions from investment management is very important, else it will lead to the losses. Predictive analytics. What is predictive analytics? It is looking at the historical data and making predictions about the future. Remember, prediction is something very difficult. Even though we have a historical data, doesn't mean that the future will listen to the past. It is just a guide. It is just helping you to understand what has happened in the past, and based on that, you are trying to predict or detect what is going to happen in the future. So predictive analytics tools, machine learning techniques, artificial intelligence tools will help you do this calculations. And also machine learning using sentiment analysis. For example, machine learning techniques are used in sentiment analysis. For example, there are a lot of news in Twitter account, right? So in Twitter, some stocks are making a lot of noise, like now Adani Group is making a lot of noise because they're not able to do good, and some stocks are in loss. So these kind of sentiments will be analyzed using machine learning techniques. Example, by looking at the nature of tweets in the Twitter, machine learning techniques, the machine learning algorithms will analyze the sentiment in the market, and that sentiments will be helping individuals take investment decisions. Generating signals. So using technical indicators, you don't need to worry about the historical data, the junk data that you have in your Excel. You need not bother about that, right? You have technical indicators like simple moving average or relative strength index or MACD, any other technical indicator out of 4,000 technical indicators that are available. You can use any of those technical indicators, and those tools will help you take buy or sell signal, and they'll help you at what price, at what time you have to place that buy or sell signals. So that's how technology, the fintech, is helping in stock trading. Now, digital wallets. Digital wallets are way of our life nowadays. Without digital wallets, we're not able to live in everything. Almost everything we're using digital wallet. So why we're using digital wallet is very simple. We have convenience, we have speed, and we have secure, right? You don't need to pull up your bank account, enter password, and give OTP and make payment every time. So when you have money in your wallet, you can just make payments instantly. And that's the beauty of using digital wallets. And that's why there's a lot of traction towards digital wallets all over the world. If you can look at the examples for digital wallets, it may be Paytm, it may be Google Pay, Amazon Pay, Geo Money, Freecharge, Yonos SBI, Airtel Money, PayZapp, right? And also PhonePe. So these are the examples for digital wallets. Credit rating agencies. So credit rating agencies play a significant role in helping banks and financial institutions in understanding the credit standing of an individual or a firm or a country. These ratings are very important because this analyzes the probability of bank or financial institution losing the money in the lending process. And these credit rating agencies help the banks and financial institutions in tracking the current financial health of an individual or a firm. So there are several credit rating agencies that are providing these services. For example, Credit Rating Information Services of India Limited, CRISIL, Investment Information and Credit Rating Agencies of India Limited, ICRA, Credit Analysis and Research, CARE, ONIDA Individual Credit Rating Agency of India, ONICRA, Fitch India, and also Brickwork Ratings, BWR. So these are the credit rating agencies that are helping banking and financial institutions and also the insurance companies and stock markets where they identify the credit standing of an individual or the companies. So here the largely it is to do with the individuals. Cryptocurrencies. So cryptocurrencies are right now ruling the financial services industry. Right now they are more preferred because of various advantages they carry. For example, the transaction speed, the transparency, the transaction cost, and also the accessibility, right? And also the security. These are the reasons why they are preferred, and also the privacy they ensure, because that ensures the absence of middlemen in the banking and financial services industry. So the cryptocurrencies are also making a lot of noise, and they are expected to replace the physical currency in the future. Robo advisors, as we mentioned, the robo advisors are known for the accuracy of suggestions. So why they're known for the accuracy? Because they take objective considerations in financial advices. They not look at the hard emotions, rather they look at the actual situation of a particular individual. So what is the cash inflow? What is the cash outflow? What are the assets? What are the liabilities? Right? So all those things will be taken into account, and also they take into account the age factor and the risk factor while they suggest the financial advices. So that's why the accuracy is more close to the precision. Now, one more advantage of going for robo advisors is the lowest cost. So the robo advisors providing financial advisors at lower cost. The financial services are available virtually, and that's when the cost can be reduced. In the brick and mortar system, it is too hard because the resources that are paid high will increase the cost of these services. Robo advisors remove bias, or they remove the hard sentiments from their decisions, and that is very important in taking financial decisions. The technical competency of robo advisors is far better than the individuals who actually visits the clients. For example, the individual who is a certified financial planner, right, who visits, may not be good in all the financial products, and they may have limitations, and they may allow their bias to intervene and provide financial advices. When it comes to the robo advisor is a specialist who actually knows most of the product and services, the features and characteristics of a product and service, and they'll be able to give a precise financial advice. The scope is broad when it comes to the robo advisor. For example, the person who is actually good in tax planning may not be good in providing financial advice on the pension plans, or the person who is very good in providing pension plan advice may not be good in suggesting on the cryptocurrencies. So when it comes to the robo advisor, these robo advisors are specialists in their own areas, and that gives a accurate or clear advice, or very good advice on which financial instrument to be bought and what are the advantages of each of these financial products. Budgeting apps. Again, the budgeting apps are helping individuals in understanding their cash inflows, right? And also they help in understanding the cash outflows. For example, it will broaden their thought process. For example, what all cash inflows I can have. For example, when I think about my cash inflows, I may think of a salary, or I may think of a bonus, or I may think of some interest income from my bank accounts. But budgeting apps will give a different insights about what all cash inflows can an individual have in his life, and also what all expenses that are possible and what all expenses that can be reduced in which manner. So that gives a broader thoughts about the income and expenditure. And also it gives scope for efficient tracking of income and expenses, because when it is known, it is easy to track. So when the expenses and incomes are known, it is easy to consider for better financial planning. And these budgeting apps are user friendly, and there will be no need for any financial advisor who need to help you to understand these apps. For example, Moneyview, ET Markets, Dhani, right, and Walnut Valley, and also Money Control. These are the apps that are available in the market. So these budgeting apps are significantly helping individuals in taking the financial decisions. What are the risks that are posed by fintech implementation? Fintech was considered as the gift to the mankind, but at the same time, there are several threats from fintech solutions. So, what are those problems that are posed by fintech implementation? Threat to brick and mortar system. This was one of the important limitation of fintech implementation. Though this can be an insignificant consideration when it comes to the fintech, but at the same time, there was a huge loss for banks and financial institutions when the fintech solutions were implemented. For example, fintech implementation significantly reduced the footfall into the banks, the financial institutions, and also into the stock markets. When a customer visits branch to withdraw cash, he just not do that. When he visits branch to withdraw the cash, a banker will have an opportunity to do cross selling. This cross selling opportunities have been lost. The banker is not able to do anything beyond this withdrawal or accepting deposits right now. Right now, the individuals are visiting branches in very rare occasions, only when there is a problem in the bank account which requires individual or the customer to visit the branches. Since the footfall is reduced for a bank, the bankers are not able to do cross selling. For example, when an individual visits the branch to withdraw cash, the banker has an opportunity to sell an insurance plan or a mutual fund, or they had option to help individuals to take investment plans, which otherwise is not available because individuals are not physically available in the branch. So that is one of the biggest limitation of fintech implementation. Rash or impulsive decisions. When the apps are available in the mobile, when the digital wallets are available, when the cash is available in the ATM, and when you have cash in your phone pay or Google Pay, individuals tend to spend aggressively, because they do not feel that value that they are actually spilling out. So that is one of the important limitation of fintech implementation. When you have paid hard cash to someone, you really feel how much you are actually paying. Let's say you are paying 20,000 hard cash to someone, you really feel that you are paying 20,000. When you just transfer 20,000 using your net banking facility, it is just happens in few seconds and you don't really feel that you lost 20,000 from your account. And that's how fintech will, you know, pose threats in terms of rash or impulsive decisions. Security concerns, right? So technology is not for everyone right now. There are people who don't understand technology. There are educated people who don't understand how to use apps, digital wallets, and how to use their ATMs, right? So when those people use this digital technologies to make financial transactions, they are more prone to the risk, the financial risk. That is one of the security reason. And also today, fintech solutions have posed a serious threat to bank accounts. For example, a wife has the user ID and password of husband. Children have the user ID and password of their parents, right? And a friend has user ID and password of another friend, right? So it is all exposed to the security concerns. And when something goes wrong, the money will be lost, right? So that's how fintech has more prone to the financial risk. Financial exclusions. There are many individuals who are still out of this financial economy, right? So there are many individuals who don't have bank accounts. There are many individuals who don't have, right? They don't have access to the digital wallets, and they don't have access to advanced technologies to access their bank accounts using net banking facility, right? When they don't have access to these facilities, they don't have permissions to use, they don't have scope to use these services at large. And when they don't have access to these services, it is difficult for them to make the best use of their the banking services. That's financial exclusion. Credit scores, right? So many a times the banks grant loans based on the credit score that is generated in the name of an individual. Not all the time these credit rating scores, let's say an individual has a credit score of 750 and above, it not always reflects his credit worthiness. For example, what if an individual who has a fraud mindset but he has some money in his bank account? He can do a lot of frauds, right? For example, a person who has a fraudulent mindset, who has money, who just use his credit card and he repays for 2 years consistently, he do honest transactions in the bank account. Now after 2 years, he'll stop making payments. Now his credit score indicates that he's a very good customer to a bank, but in reality he's a fraudulent customer. Now, based on these credit ratings, if the bank provide loans to this person, the next moment it will be absconded. So that kind of cases are more when there is a lot of excessive dependency on the credit scores. So depending on credit scores is not completely risk free, right? There is a risk involved in using credit scores. Insurance underwriting. This is a very serious problem in insurance industry. Now, insurance plans are given based on the information that is filled in the form and also the background verification that is done. So many times this information will go wrong because these informations are collected objectively. What if a person who has a health issue, he hidden his health issue, right? And it is hidden right now and the premium is same. Let us say there are two customers with the same age, 35 years. Now one customer is free from any health issue and the another customer has health issue. Since the online insurance plans are available, now one person who has health problems will hide his health problems because he understand the moment he disclose there is a health issue, the premium will be charged at higher rate. Now he will hide that problem, health problem. When he claims, many times those things will not be recognized. So he will claim, and also the person who has no health issue also will go for a claim after 2 years. Then the person who had health issue will be more benefited compared to the person who has no health problems. So that's a problem in insurance. And that will happen when there is too much of objectivity in choosing a premium, choosing customer for a particular plan. As we all know, data is the new oil, and that needs to be used efficiently. The lot of information is generated by bank accounts, a lot of information is generated by stock markets, and also a lot of information is available with insurance companies. Now, how best the companies are make use of this information, the available information, right? So that is also one of the reasons why fintech implementation is not that easy, right? Many times the information that is available with the banks, the financial institutions, not necessarily precise, and there will be a lot of scope for confusions, there will be a lot of scope for manipulation of the data. And when the data is manipulated, the decisions that are taken based on the data will be wrong. And that is one of the limitation of fintech implementation in banking and finance industry. Fintech regulation in India, like any other country, even in India, there is no single rule that will bind all fintech players, because fintech industry is largely fragmented, because there is a bank, there is a lending institutions, there are insurance companies, there are stock markets, there are pension authorities, there are mutual funds, right? It is largely fragmented. So there are different regulators, there are different organizations that will monitor, regulate the entire industry. Here, the main regulator for fintech industry is Reserve Bank of India. So, Reserve Bank of India controls most of the financial transactions that happens within the country. Right now, Reserve Bank of India is following a concept called light touch approach. So, light touch approach means industry is growing, industry is evolving, India is becoming a hub of fintech domain. And now Reserve Bank of India understands that the industry has to grow, this domain has to contribute a lot to the society. Now they cannot stop it. Though there are serious concerns with fintech industry, they cannot stop it. So they want to look at the broader view of the entire industry. They want to have a satellite view of how the industry is actually going to perform, but at the same time touch lightly on the industry and regulate them, allow them to do small transactions initially, and then allow them to go for a big things in the industry. So that's how Reserve Bank of India is approaching fintech solutions in the country. So Reserve Bank of India always have Banking Regulation Act 1949 to have in place when the 1949 the Banking Regulation Act was given, and this actually captured most of the banking transactions, the what needs to be done and what not supposed to be done in the banking business and also in the financial services industry. According to Banking Regulation Act in 1949, payment banks are restricted. The payment banks are restricted, and those payment banks that wants to operate in the country, they were supposed to register under private limited company format. That's important. That is under section 22 of Banking Regulation Act 1949. So according to the act, they are not supposed to give loans to the society, to the consumers, and also they're not supposed to issue credit cards. So these were restricted. Securities Exchange Board of India is the second important regulator when it comes to fintech. Especially Securities Exchange Board of India monitors stock market operations. So stock market operations will be monitored and regulated by SEBI. So they created an innovation sandbox in Feb 2, 2021, and this is to promote the ecosystem for fintech solutions, fintech innovation. So basically in the stock market, there are a lot of changes have happened. For example, we have handy mobile apps, we have new brokers or brokers in place who are actually helping customers, right? And they are helping these brokers and also the clients to use technology in providing stock market services. Pension fund authorities. So pension fund regulatory and development authority. So they regulate the pension funds. So again, they also follow plan big, start small. So plan big in fintech domain and start with a small changes. For example, opening NPS account through using QR code. and this was started by Bank of India and Pension Fund Regulatory Development Authority. And this was one of the milestone product that was developed. And also, the paper-based KYC is eliminated. They understood that paper-based KYC is not going to work anymore, and there is a need for technology to replace this paper-based KYC. And also, they have introduced robo-advisors to provide support to those who wants to opt for pension funds. So, Insurance Regulatory and Development Authority (IRDAI). So basically, this regulator is responsible for regulating insurance sector in the country. So again, Insurance Regulatory Development Authority also has developed a small sandbox for regulating the players in the industry. So the main focus was to ensure the orderly development of insurance sector with innovation and customer service. There was one more regulator, the Foreign Exchange Management Act. It's an act enacted in 1999, and this is only for the cross-border transactions that happens between the countries. That's FEMA Act. Payment and Settlement System Act 2007. So this is another Payment Settlement Act that was enacted to ensure the virtual payments, the settlements will happen transparently. And this is also called as PSS Act, and the important regulation related to payment systems. All the payment gateways, payment systems, and clearance systems should follow the guidelines that are given in this particular act. And RBI exercise power under this particular act. Payment aggregators and guidelines. So payment aggregators. So when we say payment aggregators, they are actually the aggregators. They actually collect money on behalf of the customers, on behalf of the merchants. So and they actually follow IT Act 2000. So Information Technology Act 2000. And this particular guideline will talk about the capital requirements for customer and also the merchant. Technology validation and also security endorsements, whether the softwares, the tools they're using are endorsed by the authorities. So that also they need to confirm. Data privacy. As of now, the data privacy things are taken care under Information Technology Act 2000. But there will be another act called the Personal Data Protection Bill that is still pending for submission in the Parliament, and that will definitely broaden the scope for fintech solutions. NBFC's regulation, so non-banking financial corporations, when they want to provide fintech services, and they should obtain license from Reserve Bank of India under Section 45 IA of RBI Act. So that's a requirement, and that is one of the regulation in fintech domain. There is a significant change in the way KYC has been done related to any financial services. For example, Reserve Bank of India recently changed the KYC from KYC to eKYC because there was a lot of cost, time, effort, authenticity concerns were for non-banking financial corporations and fintech players with KYC form, because for KYC there is a form to be filled physically, the form need to be sent, and also the address verification need to be done physically, right? So those things were involving a lot of cost, time, and effort. But now these things are happening in eKYC format. For example, KYC is happening on video format. Now the bankers will not ask you to visit the bank personally, they'll do video KYC, and during the video KYC they'll generate OTP in your mobile or in your Gmail ID or your email ID to ensure there is a authentication that is done from the client himself or herself. And there is another KYC, that is KYC based on Aadhaar, right? So Aadhaar is another form of KYC that is introduced. Recently, there was a judgment from Supreme Court that the private parties are not supposed to access central KYC registry. So this will have information about all the citizens of the country, and they were not supposed to access this. So they have actually disabled access to these private players. Because of that, there were a lot of problems for fintech players because they were not able to access central KYC registry, and that's where the actual information, the real information was found related to a customer. But now they have introduced some QR based technologies and XML files with masked other files for validating customer's identity. So that's a change in the way the KYC has been done for fintech services. RBI Ombudsman scheme. So RBI Ombudsman is compulsory for all the banks and financial institutions have ombudsman, their own ombudsman to resolve uh, complaints and escalations from the customers. The same holds true when it comes to the fintech player. So even now, the fintech players are supposed to have their own ombudsman where they need to resolve all digital transaction related complaints and escalations within the system itself. So that's the requirement for every fintech service provider. And actually, Reserve Bank of India holding all financial services, all financial fintech service providers very tightly on this. And the ombudsman scheme is very strong, and most of the customer queries need to be resolved at the fintech player themselves. And for this particular, the ombudsman, there will be Reserve Bank of India officers who will be appointed as the members to resolve these kind of queries or to resolve this kind of complaints. UIDAI, this is responsible for Aadhaar administration. So Aadhaar administration is with this particular regulator. So a fintech player who initiates Aadhaar based KYC, and those information will go to UIDAI for validation before the confirmation is sent to the merchant. And all payments systems fall under this category of screening should do this particular formality. So fintech now become a norm. Fintech will become a culture, and fintech will become a way of life. So we have to adjust to this, and the Gen Alpha will have more interest in this fintech solutions rather in brick and mortar solutions in banking and finance industry. So that brings us to the end of this series of videos on introduction to fintech. So here is a quick recap of what we have discussed so far. Fintech is a term used to designate any new technology that aims to improve and automate the use and delivery of financial services. That means use of internet in providing banking and finance solutions. Fintech applications used both for backend and customer service requirements. So backend tracking of data and also to provide customer services. The roots of fintech can be found way back in 1858. According to the market data survey results, global fintech industry projected to reach a market value of approximately $324 billion by 2026, growing at CAGR about 25.18% between 2022 to 2027. There is no single regulation that binds all fintech entities under single law. So, since the banking and finance solutions are largely fragmented, so each of these fragments, each of these sections will be regulated by a different regulator. Any organization providing fintech services should obtain license from RBI under Section 45 IA of RBI Act. So that's all in this series of videos. I hope you enjoyed the videos. Thanks for watching.